Good evening. Welcome to a special holiday edition of the Shadow Trader Video Weekly. I'm your host, Peter Reznicek from ShadowTrader.net. This video is going to be split up into 4 parts. The beginning is going to be technical analysis of the majors like we usually start. So I'm going to definitely talk about the S&P, NASDAQ, and Russell. See how the charts are looking going into the holiday and into the end of the year. I'll flip through Fangman plus T as well because those are obviously the stocks that I trade most often, and I do still always think that they are somewhat of a bellwether for the market. Second portion is going to be market profile. There's not a whole lot of nuance that I want to go over this week, but given that it's market profile, there is always market generated information that we should be carrying forward in our narrative. Part 3 is where it gets very exciting to me. It's going to be the trade of the week, but more importantly, it's really going to be 4 options lessons for you that are kind of hiding inside of the trade of the week. I'm going to break down a Tesla trade that we just closed in Weekly Options Advisory. But more importantly, when I break it down, I'm going to give you 4 specific options lessons that I think you can take and apply to any type of options trading yourself. All right, last but not least, we're going to have a trade idea, and there's only one. I went through all my charts earlier today, and it was really kind of slim pickings to me. I didn't see a lot of things that I liked, but there was one stock that stood out to me that I think might be in play for next week. I'm going to tell you what it is at the end of the video. All right, without further ado, let's get into it. All right, part 1, technical analysis, where we always like to start. Obviously, it is the beginning and end of everything. Everything starts with the charts, everything ends with the charts. Remember, the charts are footprints of money. So that is where you want to begin. So I'm looking at an S&P daily here. And again, this is being recorded on Wednesday afternoon, December 23rd. So just keep that in mind because a lot of you are used to watching these videos over the weekend when the entire week has completed, but that's not the case. This video is being recorded early. One of the things that I'm seeing in the S&P is you could make the argument that we've got a diamond pattern going on. Diamond patterns tend to be pretty powerful. Basically, you don't really know which way the diamond pattern is going to break. It could be either way, but usually diamond patterns, when they do break either way, it's a larger move than you would expect. They're relatively powerful. So this one's kind of wonky. I'm not really sure that it's a classic diamond pattern, but more or less. But either way, notice that the last 2 sessions, but after this big liquidation break reversal have been somewhat lackluster. There's been a lot of kind of backing and filling, but really the main focus, the main takeaway from this whole chart really should be right here. This is your support line at around 36.45 to 50, and that is where the liquidation break earlier this week occurred. Remember, liquidation breaks can be news driven. They tend to come out of nowhere, out of bullish patterns. This one was news driven. If you recall, earlier in the week, there was that new strain of virus, et cetera, and then you get this balancing. But again, the fact that it was bought back up proves that it was a liquidation break. And remember, the main takeaway here is liquidation breaks strengthen a market. Correct? Because they take potential sellers out. All right, let's move over to the NDX. Nice trend line action, looking good, looking strong. The diamond pattern is not really here. It's not all that prevalent. I think this honestly has a lot of potential to still put in a lot more sideways action. I mean, without me actually coming out and saying it, one of the takeaways that I hope that everybody's getting from the TA that I'm showing you is I'm not really aggressively bullish or bearish right now. I'm not 100% sure what goes on into the end of the year, so the charts look, somewhat muddy to me. I mean, obviously more bullish than bearish, but still just kind of a sideways activity for now. Which brings us to, last but not least, never least, obviously, because the Russell, because it's so powerful, but the strength is just unbelievable. Anybody who's been waiting for a pullback in the rut, myself included, is just not getting it. It's absolutely just doing the Spalding thing from Caddyshack, where the old guy's like, you'll get nothing and like it. And that's pretty much it. Any buyers that want to step into small caps here, they're getting nothing and they're probably not liking it. I mean, here's that break, which was so minor, and the rut just refuses to pull back. Now, I think part of this, if you really want to look at it from a TA perspective, is it's a sign of strength. There's no doubt about it. I mean, small caps are more or less risk on, and that's it. So I'm really not seeing anything there as far as a pullback. Will the first pullback be buyable? Certainly. I mean, I'd be looking at this 20 MA. One thing that I do want to tell you about the rut it has a different nature sometimes than the other indices. And this is important to note. I find that the RUT tends to liquidation break hotter and heavier than the other indices. So keep that in mind. Point being is that don't be surprised if at some point in the future you literally come down to the 20 MA in one day. Like I've seen this happen before in the RUT. This literally could be just one session and you just get this large red candle and it's like boom, you revisit the 20 MA like all in one day. Trust me, it can happen. I mean, look at some of the volatility in the RUT on a daily basis. It can move a lot, so just be aware of that. At this point, being that would be the first pullback in a while, do I think that's viable? More than likely, but obviously you got to check out context, wait and see how it is. But I'm just kind of pointing that out to you guys that is a classic way that the RUT can act sometimes. All right, let's move into Fangman plus T. As I was saying in the intro, that no amount of TA on the majors to me would be complete without looking at Fangman plus T, because to me they are really a bellwether for the market, and I watch these stocks very, very closely. All right, let's start with Facebook. Honestly, the pattern is simply ugly here. It is rolling over. They are somewhat being, hit by some bad news here and there. There's antitrust stuff that is just kind of on the horizon all the time. Google's catching a little bit of that at the same time, but that's not really what matters. What matters is that you're definitely seeing some lower highs being put in. You've got the high here, you've got lower high here, you've got multiple lower highs here. And even as the market has been more bullish, it feels like Facebook's just kind of peeling off. So my take on Facebook, I would do nothing until I can figure out what the play is against this support line. That I would like to do. It's around 250. It's a big number. There's decent, evidence that we probably have good support there. Generally, when you make a new all-time high and then you pull back, the pullback to that level, that's called a major support as opposed to a minor support, because it's the support level that happened before a new high, whereas a minor support would be one that doesn't have a new high preceding it. So I think that's important. I would probably be starting to look at options plays on the put side around that 250. Those of you that follow my weekly options, I'm a big believer in risk reversal, broken wing butterfly, unbalanced butterfly. These are the types of things I'd be looking at to leverage some of the premium, especially on a down day when the market's selling off, when that volatility is getting pumped into those puts. I'd be looking at that 250 strike and I'd be doing something with it, meaning I'd be using it in the context of a complex spread. It would probably be the centerpiece or body of a butterfly spread, or it would be the short strikes of a ratio spread, something like that. I would be leveraging those 250 shorts on the way down if Facebook continues lower. All right, let's take another look at some more here. Let's look at Apple. Absolutely love it. I still have a position I'm carrying in here. We just wrapped up a weekly options trade in Apple that was fantastic. We had a 132 long on the 125 strike, and then we were short like 3 options like further out up here. I think it was at the 137, right up against this resistance. That went fantastic. I haven't turned on anything new in the stock as of yet, but I'm looking. I'd like to see a better pullback. If I don't get it, I'll probably structure something for next week's expiry for moving closer to the December 31st against that 138 level up here where that prior all-time high was for resistance. All right, let's look at Netflix. We're going straight in order, calling this the Fangman plus T. Absolutely hate this chart. Do not like it at all. I think it's a mess. I think you have a false breakout over trend here. You have a false breakout over trend there. Here a break, there a break, everywhere a break. I don't know what to do with this. I think it's a mess. I was saying for a while that I like the 460 support. I was playing puts against that forever. Again, weekly options advisory, we probably hit that 460 put trade multiple times, worked like a charm every time, but what are you going to do now? What are you going to do with this chart? The answer is nothing. You're basically going to Netflix and chill, but you're not going to Netflix at all. You're going to do nothing with it. So maybe you're just going to chill. All right, let's move on to Google. Kind of a whole lot of nothing too, but not as much of a nothing as Netflix. I like this little gap fill area here. I'm watching it and notice that the gap fill area ties in to the 1650. So I might get a little something going against that 1650 next week on the put side, or maybe we just drift into that support and then bam, straight to the upside. I'll be looking risk reversal for the call side or something of that nature. All right, let's move into the M of Fangman plus T. Microsoft, don't like it. Can't say anything really good about it. A lot of sideways action. You got the break here that I was looking for out of that tight pattern, but once you got that break, you moved up. Not bad, okay. I mean, I shouldn't be too mad at it. This is kind of how Microsoft works. It's kind of a slow mover, a lot of bumping and grinding back and forth, but again, not really interested in doing anything, but similar to Apple, could we do something against the all-time high just over the 230 coming into December 31st? Of course we could. That would probably work out okay. So again, what am I going to be looking for? Ratio spread, short calls at the 230, broken wing butterfly with mid strikes at the 230 and a high strike capping off the margin way up at the top, 240, 245. It's a garbage call, right? It's just basically capping off the margin, something like that. But would I go for an all-out risk reversal here? I don't think so. Remember, you want to set up your options trades in terms of what structure you are picking. Make sure that that structure that you are picking is matching how aggressive you want to be in the stock and how bullish you are. So this is a perfect example in what I'm talking about with the Microsoft and with the Apple. You want to match it up. Am I all out bullish on Microsoft that it's definitely going to 230? No. If I was, I would do a risk reversal. I would sell puts and buy call verticals. If I think it might meander up there, but again, it might not, then I'm going to be in more of a complex spread that I'm going to be able to put on at zero cost, okay, or at very, very low debit, so that when and if Microsoft does nothing and just like goes sideways and my call structure goes out worthless, well, guess what? I don't lose any money. That's really the way. That's basically what I just told you is my options advisory in a nutshell. That is my mantra: death before debit. All right, let's move on. Microsoft, and what's next? FANGMA. Next A is Amazon. Horrible, absolutely horrible. I would do nothing with this. I mean, it's just, I've had so many comments in my weekly options pro trading room. People are like, Peter, what's Amazon doing? I say, I don't know. It's not a heck of a lot, a whole lot of nothing. I mean, if it was to step up its game and move out of this consolidation, only thing I can think of right now is I'd probably be interested in a 3,300, 3,400 ratio spread. I'd buy the 3,300 calls and I'd sell the 3,400 calls 2 times to finance it. If I could put that trade on for nothing or close to nothing, I would do it. But other than that, in terms of laying out debit for this dog right now, no way. There's no way I would lay out any debit in this stock currently, and that's MA. N is for NVIDIA. Got to say it right for all those people out there. They don't like it when I say NVIDIA. It's NVIDIA, or I guess that kind of sounds sad. I guess I say NVIDIA or whatever. I don't know. I get all kinds of grief from people telling me, you're saying this wrong, you're saying that wrong. But anyway, this is also not doing a heck of a lot here. You got false break here, right? And then lower high. And now you're consolidating and rolling. So again, what would I be thinking in the stock? Not until we see support here on the whole number, 500. Probably 500 is going to be supportive. I wouldn't be surprised. It did it before. It makes perfect sense. You have a clump of support here. People like to buy these big round numbers. Buyers are waiting in the wings. They're sitting there. So again, same thing. Would I do something on the put side against it? Probably. Would I be waiting with everybody else to buy around the 500? Probably. I'd maybe day trade around that area, have some orders in at 501, 550, et cetera, right down to that figure. And then, and only then, if I can see that the support is real, I see that there's sellers drying up around that area, okay, then maybe we look at the NVIDIA back to the upside. All right, last but not least is the T in Fangman plus T, the mighty Tesla. And I say mighty because it honestly has been mighty. Stock's just been on fire. Added to the S&P 500 last week on the 18th, I believe was the date, or maybe it was this week. It was probably this week, actually. I apologize, on the 21st. And just kind of a hold. What do I think is going to happen in Tesla going forward? I think volatility is going to drop. I think it's going to be quieter now that it's going to be in the S&P. And honestly, the stock needs a lot of sideways activity here before I could get interested. I think I would not even be surprised if this builds out for a while like this. So be careful out there in Tesla. I think it needs a pause here, and being added in the S&P might actually bring about more of a pause, maybe a little bit of a contraction of volatility in the name. All right, so let's recap a little bit on the TA front because it's important. I talked about a lot of stuff in this whole section of the video, and I think all of it is important. Market, how do I feel? More bullish than bearish, not really putting the pedal to the metal. And when I talked about those Fangman plus T stocks, I really hope that that point was driven home about what I said about matching the strategy with how aggressive you feel, how bullish you feel, how confident you feel. It's so very important. I would say if I could pin down one thing that has been a driver of my success with options, honestly, has strictly been that. It's all about what you don't do. Do not ever come into this game thinking that this is my strategy, this is what I do, and today is a day that ends in the letter Y, so I'm doing it. It doesn't work that way. There's plenty of days where you should be doing nothing, and if you're not 100% confident about the stock going from point A to point B, that is where the types of concepts that I teach come in. That is what the broken wing butterfly, the ratio spread, the unbalanced butterfly, that is the situation that these spreads are for. This is why I use them so much, because when the stock doesn't do what you expect it to do and it goes sideways, you're not sitting on a pile of debit that is attritioning where you just paid $3.50 for some vertical and the stock goes sideways for a week, and guess what? At the end of the week, you're dumping it for 80 cents, okay? That's the thing. When the charts are showing more bullish and there's a lot of high confidence, or perhaps you're coming off of a pullback, that's when it's okay to lay down debit on the line or do it as a risk reversal, which is my preferred modus operandi, where I will sell put credit to finance that call vertical or whatever. But again, you gotta match it up. It's not one size fits all. This is a hard game, takes a lot of time to acclimate yourself to it. And I can't stress this enough how important this is. So really the main nuance that we should be talking about here, because I was saying in the introduction that there's not a lot, is I want just to put your focus here, and I'm just going to clear this up because I need to request tick data there to make this cleaner. I want everybody to focus on the overnight activity of December 20th. If there's just one nuance that you take away from all this talk, especially in this market profile section, I want to just point you to one thing, all right? The market sold off heavy in the evening on Sunday night. This is December 20th, okay? But what happened on 12/21? There's one main takeaway. Now, obviously on 12/21, and I'll just give this a second to come up, but obviously on 12/21, which is this particular session here, it's this session here, on 12/21, we had a big rebound because we closed here. So obviously there's a reversal. That's that huge shadow that I showed you when we were looking at the technical analysis of the charts, obviously, et cetera, et cetera. But that's not really what's important. What I want you guys to focus on mostly is the fact that on Monday, traders in the RTH session, which stands for regular trading hours, were not able to get anywhere near the overnight low, which is way, way down here. I mean, I literally have to just keep scrolling. Oh, keep going. Oh, keep going. Okay, it's here. This is the overnight low. Sub 3,600 overnight on Sunday night. Might have even been lock limit down. I don't know. I wasn't paying attention. I'm not really a nighttime futures trader. Could have been lock limit down. Honestly, huge move at that point, and then we get a move back. But again, the main takeaway is how bearish can it be if in the next particular session you're not even able to get anywhere near that low? And I always like to point this out to people, and this is one of the main selling points, I think, to me, to having market profile software: 15 contracts at the low. Remember, it's always going to be this tiny number when the selling is over. Always. It's always going to be this this small number. So it's nice to see that, and that kind of gives you confidence sometimes to be throwing orders down at the lows and at market as you're moving off of that low contract number. So that's really important. So consider all of this activity on the whole Sunday night into Monday a liquidation break. Liquidation breaks strengthen the market, and then you can see even on this overnight activity, subsequently higher low, and you had a balancing day here, which obviously just took off some of the froth of this huge reversal. A lot of times when stocks are strong off the lows like that, they need a pause. You got that pause in the next session, and then Wednesday to me was just kind of shaky. I mean, it's a poor-ish high. It's not all that much excess on the high, and you closed kind of low. You do obviously have a lot of overhead supply here potentially from the value area. So we'll see how this acts. And this is also the last session coming into a shortened session, which is Thursday, which also, you know, again, to me, it's kind of a wait and see situation. I'm not overly aggressive with doing anything coming into this shortened session, which also, don't forget, has 3 full days after it of the market being closed, Friday, Saturday, Sunday. And although I'm not much of a, you know, scared of the news type trader or think that that really matters on the weekend, you know, for what it's worth, we are in a cycle right now, right? I mean, think about it. There's a lot of COVID news coming out. We did get that, you know, new strain in the UK. And beyond that, the stimulus thing is still up in the air as of now, right? As I'm speaking to you now on Wednesday, that's still up in the air. So you basically, what I'm saying is you have 3 full days where different pieces of that news cycle are going to play out, and who knows? So I'm a little bit, you know, not so, I wouldn't use the word cautious, but basically just not putting my, you know, foot on the gas all the way. I'm not in too much stuff right now. I'd like to see how that plays out. And looking at it just strictly in the lens of market profile, to me, it's a lot of overlapping value, and it's a lot of value just kind of back and forth. Here's overlapping, then you move up here. Very, very squat profile, relatively wide point of control on Wednesday. What does that tell you? Market is essentially more or less in balance. Okay, trade of the week, but more importantly, 4 options lessons that I hope you will enjoy. There's a lot of takeaway, I think, from this particular trade, and that's why I chose it. Even though we had a lot of great trades recently that I could have picked from, a lot of green on the screen, or in this case, black. And but we're going to talk about Tesla specifically, which is number 505 recently, that kind of started out one way and then morphed into another way, so to speak. So it was a bullish trade, which was a risk reversal, but the structure was kind of interesting in that I was using initially a call broken wing butterfly as the debit part of it on the call side, and I was using a put broken wing butterfly on the put side as the credit side, which was financing it. So you'll notice here, it wasn't financing it completely, but a decent amount. The call side cost $750, and it was a big butterfly of 650, 700, 800. So that's why it's called broken wing, because it normally would be a 750 on the top strike, but it was an 800, which makes it a little bit cheaper. And then I was also using a broken wing butterfly on the put side, using that 500 strike, which is important, as the sort of credit collection vehicle, buying a 510, selling 2 500s, and buying a 470, which was 65 cents. And the thing is, if you structure it this way, where you buy 2 of one and sell 8 of the other, that's how you can generate almost enough credit to negate the debit. So let's take a look at quickly what that looks like in our weekly options trading room. I'm just going to do a little search here for Tesla, and that's going to bring up everything that I've done just in Tesla in our alerts. And we're going to go to 505 here where it started, and I'll show you the timestamps and all that. But you'll see in a second why I'm doing it this way, because I think it's just much easier to follow the trade this way. So everything I just showed you is this part right here. Notice that it was buy the 2 butterflies on the call side, and then buy the 8 butterflies on the put side. So one was the 375 debit, and then it's 8 times 65 cents, which brings in the credit, right? But what happened then, and I got to take you to the charts here because I was looking at a 650, 700, 800, is this is happening on December 17th, as you can see here. So we're coming into the end of the week, and there's this ramp up in Tesla because of the addition into the S&P 500, and I'm bullish on the stock. But after I put on the trade, I think to myself, you know what? This could turn into a Lupe fiasco. Like, honestly, this could like really just break out of nowhere and go much higher. And I'm not 100% sure that the call broken wing butterfly is the trade that I want to be in, because again, I have a lot of time left to expiry. Understand that I'm entering the trade on December 17th. I have all the way until December 24th, and I'm a little bit nervous, and I think to myself, okay, I may have picked the wrong structure on the call side, because if this stock really breaks out and goes to 750, right, after 750, it's going to be problematic for me because, you know, as I was showing you, I am, you know, in a situation where it's +1 and -2, but then the +1 is way up here and I'm not really covered. I don't have a straight butterfly on. So I immediately go back in and I reverse the call part, basically, which is here. And you'll notice that soon after, if you look at the timestamps, 12:25, and then this was happening right around noon, I sold the call side. And I told the subscribers, I said, I'm changing my mind on the call side. I don't think the BWB is the correct spread. I'm gonna look for something different. And that right there is options lesson number 1, which I will get to shortly. We're gonna have a little bit of sidebar after this, and I'll go through all the lessons, but just keep in mind that is options lesson number 1. All right, so after that, after changing my mind, instead of doing a call broken wing butterfly, I say, you know what, I'm just gonna buy the 650, 670 call, which is only 20 wide, but it's quite expensive. And I said, as you can see here, this is expensive, but you get what you pay for, and thus it has quite high odds of going to maximum value. Note that we also knocked down the cost considerably with the put BWBs, and also the vertical structure can be modified later, whereas a butterfly cannot be modified much. And this is important to note because you'll see later on as the trade develops that I do actually modify it. And what I said right there is important in the sense that it's hard to switch butterflies up because they're already complex. You already have 4 legs going on, so to adjust a butterfly doesn't work all that well. But a vertical can easily be adjusted in that it can be morphed into a butterfly, right? You already have a structure of +1, -1. You can turn that into a butterfly. You can turn that into a broken wing butterfly. You could sell more verticals on top of it, turn it into an unbalanced butterfly. Basically, if the trade's not going your way, there's a lot of different things that can be done with the vertical to adjust it, to bring in credit when you need it, and decrease that debit risk, okay? So this is important. So in this case, what I've done is I, again, scratched the first trade and just bought a vertical. So now what's going on is now I'm just sitting in this vertical long, and I still have the put structure, you know, which is the broken wing butterfly on the put side for the credit. Now, that particular structure on the put side is also one of the lessons that I'm going to talk about in the sidebar shortly. Remember that as the stock is being added into the S&P 500, think about it. Leading up to that, the volatility in the options in Tesla is definitely on the rise. So what does that do is it allows you to put on complex spreads in areas where you would not be able to otherwise if the vol was lower. So putting on that put structure and getting a 65-cent credit for that broken wing butterfly on the put side that has very little risk because I'm doing it against the 500 where I know there's strong support. Not only that, but I'm more than 100 points away with short time. It's working out well for me, okay? So let's move on, all right? Buy the call vertical, so now we're in the 650, 670. Then there's some stuff I'm saying here, just some commentary, whatever. And here's where things get interesting. Now we're on the next day, which is 12/18. And let's look at the charts. We're walking through slowly. This is 12/17. And again, this will also tell you why do a bullish trade on Tesla that day. It's there, okay? And here on 12/18, we move up pretty sharply. And now I have a choice where I can either, and again, remember, 12/18 is the last day of trading before we get added to the S&P. I can either hold on and gamble and say, okay, I've got this big wide vertical, 650, 670, and if we rally next week, it's gonna go to max value and I'm gonna get $20 for it. Or I can take my profit on the trade and still kind of leave it intact. So notice what I did here. This is really kind of cool. Instead of selling it, I sell the vertical that's above it. Instead of selling the 650, 670 and taking the profit, I priced it out and I realized that the 670, 690 was trading for 891. So now the way this works is I started with this, and this is the 650, 670. And I could have just sold that when we were at the high of the day then, but again, I'm thinking to myself, I'm not sure what's gonna happen coming into this whole, moving into the S&P, whatever. So why don't I just sell this one? And that leaves me with a butterfly that's 20 wide that I can still sell. And that's the choice I made. And I instead took a $9 credit out of the trade right there and left myself with the butterfly. And that was on the 18th. And if you look back at the chart, it turned out to be the exact right move, because look what happened after that. Boom. Tesla crashed all the way back down into the 620 area, all the way back to that 20 MA. So you had a lot of bullishness coming into the whole, moving into the S&P, right? Look at how high the volume was, obviously, because everybody needs it. And then it just died out. So selling that vertical and turning that long vertical into a butterfly turned out to be the exact right play then, okay? But the trade's not over. Let's continue on. We actually continue to do some cool stuff even after that, okay? I said here, after I put that on, pursuant to what I just said, I said, look, with the market maybe softening a bit, this is a smart play. If all the puts go out worthless, we guarantee a solid profit, and we now own a $20 wide butterfly to sell. So understand that if those put butterflies go to zero, I've already got a profit locked in if you look at the structure of everything I've sold and the credits that I've taken in. And here I'm just telling people what their resulting position should be. All right, let's continue on with Tesla. Here, now we go to 12/22. We're into the next week. We are now on Tuesday of this week. Now, with a lot of time that has elapsed and the fact that volatility has collapsed quite a bit, the butterfly that was sold for a 65-cent credit, I am now working to close for a nickel debit. And you can see here, it was filled soon after, closed it for a nickel debit. So now we've taken all downside risk out of the trade. Why? Because it's cheap. And that's also one of the lessons I'm going to talk about. All right, so get ready for that. All right, last but not least, we're still continuing on 12/22. As the stock is falling down, I buy back the vertical that I sold at the 670, 690, which, if you recall, from the earlier post, I got $8.91 for. Well, just a few days later, look what I bought it back for, 27 cents. So again, what do I say? This turns our butterfly into a vertical, which will expand a lot more should Tesla rally to our strikes tomorrow. It's so cheap, it makes sense. And that's, again, one of the options lessons, which I'm gonna go over shortly when I finish this section. But remember that. When things are cheap, because you've got a positive move in the stock in directions that you expected, it is worth your time to be closing out cheap spreads or cheap portions of spreads, especially when it makes the resulting spread more bullish for you, meaning it's going to make the resulting spread that much more responsive to the market moving up after that. A butterfly is never going to perform as well as a vertical, because a butterfly will always have less delta than a vertical. So keep that in mind. That is always important. And again, I just put a little note here to all the subscribers. I said specifically, note that we sold that same vertical for $8.91, right? We just went over. So again, this is a smart play, even if we end up throwing away that 27 cents. And our resulting position is 1 unit long of the 650, 670 call vertical. All right, going on. I then bring it into Wednesday, the 23rd. And what happens then? I see a support level in Tesla. Again, I'm trying to be as non-reactionary as possible. I'm trying to be scientific. I'm trying to be, disciplined. And what do I say? I say we're going to get rid of the call vertical that we own only if, when Tesla marks at or below 645.25. Remember, we own the 650, 670. And what is that? It's a conditional order to get out at market if we breach lower on Tesla. And that was then filled. Why did I choose that? on Wednesday the 23rd. Again, back to the charts. I will show you specifically. Look at the 5-minute. And it's right here. Boom. And here's that 645 level I talked about. And so basically, I've got less than a full day to expiry. The next day is only a half day. Remember, we're going to close at 1 p.m. on Thursday. I'm talking to my subscribers on Wednesday. And what do? I put out an alert right here. As I see this happening, I say, okay, I like this, but I don't like this. And if we fall right here, I don't want to be in that 650, 670 because I don't know what's going to happen after that. This could easily just fall apart. Or if we go sideways, which is also bad, I'm losing time value. And what's going to happen on the next day? I have no idea. And because I'm only in one unit officially of that Tesla, I am not going to gamble on that. It doesn't make any sense. It makes sense in this particular trade to take your profits when you have them. That conditional order was triggered and we got out of that call vertical for $4.29. And that basically ended the trade there. And you can see all of that stuff is right here. So as I was saying in the introduction and alluding to in this live trade in Tesla, there's 4 specific takeaways here, 4 options lessons, I think, embedded in just this one trade. And here they are, okay? Number 1, exploit volatility. A lot of this worked, or certain pieces of this trade worked, such as that put BWE, because people were nervous around that event. The options were trading very rich, as I could see, on that end of last week, leading into that rebalancing on Tesla with the S&P 500. Okay, so that's important. Exploit volatility when it's there. What does that mean? Sell it, obviously, but if you're a follower of me, if you do my way of thinking, you sell it in a complex manner. You don't just sell naked puts. You can sometimes if you know you've got strong support, but you do things like broken wing butterflies for credit. Note that I was able to finance the majority of the Tesla debit using a put broken wing butterfly, which to me had very little risk. To me, there was no chance that Tesla was going back down to 500. It would have had to have taken like a 20% haircut to get down there. Plus, I love the 500 support level. And remember, I'm long the 510 put. So this made a lot of sense to me to be, again, exploiting that volatility and buying that 510, 500, 470 put broken wing butterfly for that 65-cent credit. All right. Lesson number 2. All right. It is okay to change your mind. I take you back to the beginning of the trade where I talked about putting on a structure that was a big broken wing butterfly to the upside, 50 wide, but I didn't have the risk capped off. I wanted to make it cheaper. I had upside risk. I didn't really know what was going to happen with that whole rebalancing thing into the end of the week. And I thought, whoa, what if buyers go crazy here? Could happen. Tesla does this often and it just hockey sticks to the upside. So I changed my mind. It's that simple. I just didn't like the trade. And so the lesson here is it's okay to change your mind. And I say this specifically as it applies to options because I fear that a lot of you out there who trade equities and options or one or the other, I have a feeling that you would treat this differently if it was stock, meaning that if you were just long stock, you would probably bail faster than you would on a complex option strategy such as a butterfly because the butterfly changes price that much slower. It has less delta. It's also sensitive to time, etc. So think about that for a second. A lot of people will put on option spreads and they'll look at it that way where they'll say, okay, I'm in this butterfly. It's got a huge potential payout. I only paid $7 for it. But then how are you going to feel 4 days later when it's trading for $280? You're not going to feel so good. And I just think that, and it's not really just think, it's not just opinion. I know this because I get emails from, hundreds and thousands of people all the time, telling me how they're trading their own stuff. And I know that people tend to hold on to spreads longer than they would on the stock. If they were just long the stock, they would dump it. So remember, it's okay to change your mind. I think traders should change their minds. They should change their minds often, and they should change their minds definitively, okay, and decisively, all right? And trust your gut. That's very, very important. Trust your gut. If you feel like you have the wrong spread on, if you feel like this is not going to work, bail. It doesn't matter. There's always another bus coming down the street. You can either get into a different structure or just get into another trade later on, all right? Lesson number 3. Close shorts when you can, not when you're forced to. In the trade, I showed you where I was able to close the put side for a nickel debit. That made sense. It wasn't going to do much better. 65 cents was the full credit. That last nickel isn't going to make or break me, so it's good to do that. But then notice also in the trade, there was that other part where we closed the call vertical on the upside for 27 cents, right? Think about it. We sold it for $8.91. The stock collapsed. Now the same exact call vertical that I turned the original vertical into the butterfly by selling, correct? The 670, 690, sold it for $8.91. It's now trading for 27 cents and the stock is at the lows sitting at the 20 MA. So the odds are the stock's probably going to bounce off the 20 MA. So doesn't it make sense that something you sold for $8.91 is now trading 27 cents? You should buy it back. Right? So don't be cheap about buying things back. Close shorts when you can. If you see an opportunity, even if those short options are part of a larger structure, right? A lot of people think about closing short options only when it's like either part of an iron condor or it's like a naked option, but it can also be the middle part of a butterfly. It can be anything that's collapsed a lot. If you think the stock's about to move in the other direction, it completely makes sense to take advantage of that, all right? So lesson number 3 is close shorts when you can, all right? Lesson number 4 is time is your enemy. In any options trade, there is a cycle. In the beginning of the trade, when you are leveraging the time value in the options that you're selling, time is your friend. But the moment you enter, okay, especially if you've got some debit in the trade and you get closer and closer to expiry, remember that this is a sword that cuts both ways. Time can be your friend, time can also be your enemy. In our case, when we were looking at only a call vertical coming into today, which is Wednesday the 23rd. Remember, all we have is the call vertical. Now we're long the 650, 670. We know we can get at least $4 or $5 for it, or we're going to get $20 for it the next day, which is only a shortened session, or it's going to go to zero. Me personally, I would rather take the $4 or $5 than risk it going to zero, especially on a shortened session the next day, which is 50-50. And I want you to remember exactly how I traded this. I didn't bail out just because I felt like it. I didn't bail out just because the vertical was trading for, close to $5 and say, $5 seems like a good number. I think I'll take $5 here. Absolutely not. I put in a conditional order. I looked at my TA. I said, okay, here's my trend line. If we break here, we're going to be well under 650. The spread's going to contract. I don't know if from there the stock collapses or goes up. I don't really know. You know what? I'm going to set a conditional order right here. If we breach this level, I'm out. So you understand, it's very objective, it's very scientific, and I'm letting the market dictate when I'm out. So that's very, very important. And the reason I'm doing that, again, just to recap, is because I know that going forward, time is my enemy, and I don't want to gamble with that. All right, and last but not least are trade ideas. I should say trade idea, singular, because there is only one this week. And as you can see, it's Shop, AKA Shopify. This was an idea that I put out to my weekly options subscribers here and here. We did not officially do this long, but it was something that I alluded to in messaging in my pro trading room many times. I said, set an alert here, and a lot of people emailed me, which I was really thrilled, and they were like, dude, I got that shop on the 1100 breakout. I made like 40 points, 20 points, whatever. It was great. So I was happy about that. So if you missed it, I think there's another bite at the apple here, and thus Shop is my only trade idea here. So I want you to pay attention to a couple of levels here in the Shop. Here, this prior high breakout is potentially a buy area, and notice what it ties in with. I've struck a little trend line from here, and it rides right up here, and boom, look where it intersects. You have a trend line intersecting right at the prior high. So it's probably going to be pretty good for a bounce there. So I'm going to be watching that Shop. Don't know yet how I'm going to play this, if this will be an official options trade, if it'll be a weekly options thing. I may just look for a day trade. I may just look at the equity. I personally love these big expensive stocks. I've always said that Amazon is my day trading vehicle of choice. I literally will pick Amazon over the ES anytime, any day. That's just what I like to use to pick a direction on a day time frame basis. So these $1,000 stocks, I really like them. They can move. And maybe it's just that. Maybe you're just looking for that, coming into that prior high support level, and then boom, you can, pull out a good number of points on that bounce. Or maybe it's going to be an options play, into the end of the year. But either way, I would watch that level in shop, which if you want to mark it off, you're looking at about 1143 to 1145-ish or so. This exact high was 1146.91. So let's call it really like 44 to 47 in shop is what I think is going to be a key area for next week. And that's all for this week. Thank you, as always, for spending just a little bit of your weekend with me. So let's recap everything that we just talked about. Technical analysis, markets. Me personally, I'm not overly aggressive coming into the holiday and into the rest of the year. We'll see what next week brings. If it's really stepping it up in a bullish manner, I'll probably go with it. But overall, I'm not really sure what this last week brings. I'm kind of focusing my attention on planning different things for 2021. And to that end, I'm going to talk a lot about that in next week's video, so stay tuned for that. I'm going to talk a lot about trading psychology, setting goals, things like that for the new year, so it should be exciting. All right, Trade of the Week, Tesla. If you liked it and you enjoyed some of the trading psychology stuff that I talked about and the options techniques, understand that I'm giving those types of trades out and all the adjustments that go with it, entries, exits, and everything in real time all day long to my weekly options advisory subscribers. Hit the link down below, shadowtrader.net/options. It's probably the best deal on the street. $49 a month, never a contract, cancel anytime. Come check out what we're doing. If you like it, like it. If you don't, you don't. It's all good. All right? Beyond that, shadowtrader.net holiday sale. Success 2021 is all I got to tell you. You can see it down here below. Success 2021. What is that? It's the coupon code that gets you 15% off everything on our site. Obviously, the recurring stuff like the options advisories is not included, but now would be the time for next year if you want to get cumulative tick, tape reader, trading psychology series, any of those one-time items. They're all 15% off. You can use the coupon as many times as you like, and the coupon is good until December 31st at midnight. All right? On behalf of myself and the entire Shadow Trader team here in beautiful and snowy Philadelphia, Pennsylvania, I wish you good trading, happy holidays, and good night.